Jane, what does that mean for dollar dynamics? When you look at kind of this political upheaval, it seems that the dollar doesn't really take notice at the moment of what's going on at the White House. Is that a good or a bad thing?
I think it's a bad thing. I mean, I suppose it depends on your point of view, of course. Certainly for US exporters, you could say it's a good thing. But I think the words chaos, the words mess that emanating out of reports regarding the White House certainly aren't a good thing with respect to the credibility. But I think really for economic particular, that the market is looking also at the big divisions between the Republican Party, the inability of that party to push through the healthcare reform, therefore the question marks over their ability to push through the tax reform when that gets through. So the market is of course unwinding last year's reflationary trade, but really I think there are other dynamics in addition to that which are affecting the dollar, and partly you could argue about the Fed, the lack of inflation, but also the fact that world growth is better, the fact that many investors are preferring to put their money in risky currencies or risky assets rather than the dollar, the fact that also we're seeing this massive rotation back into the euro based on a pickup in Eurozone growth, a window of relative stability in European politics. So from that perspective, I think this rotation back into the euro perhaps has accelerated that movement out of the dollar.
But does that mean that actually dollar continues to decline here? And is it, you know, kind of escape velocity? So does it happen quite quickly or is it measured?
Well, it certainly has happened very quickly. I mean, if we look, say, at the dollar index from the start of the year, we're looking at a 10% decline. And if we look at just the move from, say, around about the 20th of June, we're seeing a very accelerated movement in euro dollar particularly. Now, that is something which is usually uncomfortable for many central bankers. I mean, it's been said before, and it is often the case that for central banks specifically, it's not necessarily the actual rate of a currency that's so important, it's the movements around it. And central banks don't generally like that big movement. Now, this is potentially, you could argue, more of an issue for the ECB rather than the Fed at this stage. The Fed, of course, wants to generate a little bit more inflation. A softer dollar could help it do that job. So from that perspective, I would argue that it's fairly unnatural to see euro-dollar move in this sort of a velocity, and we would like to see, surely, at least some consolidation before deciding what the next move is.